Hey everyone, Austin Swanson here, aka 24/7, bringing you a video today on how I purchased a duplex as an investment property with none of my own money. I did this 100% financed, not with a HELOC, not what I did the first time. I did not use a HELOC here, but instead what I did is I used private money. You might hear private money, hard money, but essentially what this was a loan from someone I knew. I actually used two different lenders, and they financed me 100% of the purchase price and repairs to go and buy this property. Actually, I think it was. Let me be specific. This one was actually just 100% of the purchase price, not repairs. But this property didn't actually have that many repairs, so it worked out really well. So as before, the risk of this strategy is not being able to pay back these lenders, right? In the form of monthly payments through the mortgage, of maybe it's just interest only or principal and interest. You have to make sure that the property itself, on a monthly or interim basis, that you are collecting enough rent, right? You're running your numbers in calculator that the rent pulled in minus the mortgage payment and other expenses is enough to cover everything. I really don't worry about cash flow in the first year as long as I can try to break even and cover all these expenses. And I use very conservative assumptions for future repairs, capex, vacancy, because vacancy is huge here, right? If you have no one living there, how are you going to make those payments? That's where you have to have reserves. You have to be able to make these payments. But the next risk, right, beyond the interim payments, is at the end of your term or when maturity happens with the loans, is how are you going to pay them back, right? I believe my loan terms were 5 years, but I actually paid it off almost instantly. There were some closing times, but how I did this, right, is on the first two properties I bought, and I used a HELOC. I then had to wait 6 months for the seasoning period to do the cash out refinance. For this property, what I did that was actually worked out almost, I just got lucky in terms of how perfect it worked, but I needed the property to appraise for exactly, I think the whole numbers here, and I should almost just pull this all up to get this exact for everyone here, but essentially I bought the property for 165, and I needed for it to appraise for 220, and then if I did a refinance at 80% loan to value, that actually would pay off the loan. And what's funny is it came back at 220. And so here's some nuances here, and this is where I would like to get in the weeds of this. And if you have questions, feel free to reach out to me. If you do want to move ahead with the strategy, I highly recommend. This is all for educational purposes. So please talk to a lender before you go through the process. That you say, hey, I plan on using a bank or a private loan to purchase the property, and then to pay off those private loans, I want to use a bank and do a refinance. Now, here's some of the nuances, is I was not using a cash out refinance. The cash out aspect, where it pays off the existing loan and then you get the difference in cash, that has a seasoning period. The banks that I work with is usually 6 months. Sometimes I've heard even a year. And so what I wanted to do instead was a rate in term refinance. You're refinancing for essentially the term, 15 years, 30 years, or the rate, interest rate, right? And I didn't care about either. I essentially wanted almost the same. I wanted, instead of the 5 year on the private loan and the interest rate, I wanted a longer term and a lower interest rate locked in with the bank. And I wanted to pay off that private money. And usually, now this is where, okay, so with a cash out refinance, you have to wait 6 months. With this just a rate and term, you can actually do it like the next day. That if you bought the property in cash, you can go to a bank and say, hey, I want to refinance the property. But here's one of those little things that you have to be aware of, is you're refinancing, okay? And so in order to refinance, there has to be an existing mortgage on the property. There has to be a lien on it. And so if you borrow the money from someone and then go buy in cash, and the property that you were buying wasn't the collateral for those loans, and there's not a lien against the property, that bank, when they go do their search for if there's any liens against the property and they don't see anything, there's nothing to refinance, because then that's a separate loan. They're trying to refinance the debt that's on that exact property. So that's a very specific thing that you have to be aware of if you want to do this. The other very specific thing you have to be aware of is certain banks have much different terms of how they're going to do the refinance, how the appraisal and the loan to value and all that will work. I know certain banks, and I had to search around for this, would only on the refinance they would loan up to maybe what the purchase price was, or even 80% of that. And there was some very strange, there were some nuances where I knew when I would run the numbers, and every video I think I've been trying to hit this home is it's all about the numbers, right? You have to make sure these numbers work. Is I knew that on certain banks, when they would do these refinances, that I could not pay off those existing loans in entirety. And so I had to make sure I could find a bank that would go through and actually do a new appraisal, because I knew the situation was that I had to be quick. And this is why the situation was, my realtor reached out and said, hey, we have this duplex. Off market, are you interested? I was out biking that day, and we were off to the side, and I was using my calculator, my Excel spreadsheet on my phone, but I really didn't need it. In terms of, it was just one of those no-brainers where the purchase price was $165, and I knew that duplexes, because I've been analyzing so many of them, I'm like, these are worth so much more. It was in a great neighborhood. I knew I could get way more in rent if they became vacant. I could update this really cheaply to make it nice. I just needed paint, which is exactly what we did. We just needed to paint and clean it. And sure enough, when we did the appraisal, it just appraised for $220. It gets a little, I don't want to get too detailed here and everything of how everything goes, but at least in our area, the appraisers were using it instead of comps, a price per square foot comps. They were using it based on not even cap rates with like commercial loans, but they were basing it upon essentially their version of like a cap rate. So it was like a gross rent multiple. So they were looking at the rent, and luckily, the tenants were paying for utilities. We had higher rent because it was nicer property, and in comparison to other properties, our rent was very high, and so it allowed us to get a really high $220 on the appraisal, which then at 80%, I believe those numbers work out exactly. I'll just do it real quick just to make sure. If I take 220 times 0.8, oh man, this whole time, 220 times 0.75. That's what it was. Yes, okay, because on the duplex, at purchase, if you were doing a traditional loan, it's 80-20. No. It's actually set. This is actually part of the reason why this gets really interesting. Is for my banks, it is for single family homes, it's 20% down payments. For duplexes up to fourplexes, it is 25%. Now, let's say we're doing a duplex, I buy it for 25%. If I do a cash out refinance, they'll only do loan to value instead of 75%. They'll only do 70, essentially like a 30% down payment. But with the rate and term, it was as if it's on purchase, and so they would do it where they would say, we'll do loan to value 75%. So it prays for 220, and then they lend me based on a loan to value of 75%. So they had 165. That was exactly what I borrowed, and it paid it off. I'm glad I was using the calculator there just to make sure I got this right. So it just worked out insane. So they actually would work with the lenders, and they sent them a check. Exactly, and paid them off. I went and worked with my lawyer. We removed the lien, and I had a new loan with the bank. And essentially, if we take a step back and look at this full picture, is I brought $0 to the table. I did put in a little bit of repairs in terms of the paint, which was I think about it. We had to remove some stuff and just paint like the walls and the cabinets, and that was about it. It was and a little bit of carpet in the bedrooms. That was about it. So very minimal on my part. I probably could have borrowed that, but then I would have had to just pay it back because the loan wouldn't have covered it. But essentially, if you take a step back, I found the property they wanted. I knew it was going to go fast, so I wanted to purchase in cash instantly to close quickly to extra incentivize the seller. And so I said, hey, I called up when on this bike ride. I called two people. I'm like, can you lend up to this in these interest rates? They said, yep, of course we can do that. And got the money, paid the seller directly, did the whole cash transaction. We had an intermediary. Wow, I can't say that right now. But I didn't have to bring anything to the table. I'm using someone else's money. Then, right after, working with the bank, do a refinance. And then the bank, once that closed, I think it was another probably like 30 days or so, it paid off the lenders. And so then my loan was with the bank. I had tenants in there paying rent. That rent could be used to pay off the mortgage. And so the whole time, I'm not really spending much money besides the little bit of repairs that I wanted to do. But I probably wouldn't have even had to do that. The appraisal would have been a little bit different, or I could have probably borrowed, and then I had a 5-year mortgage or 5-year repayment schedule, so I could have worked something out if I needed to borrow that extra a couple $1,000s or whatever it was to do those little repairs, and essentially had $0 at the table. But this was just another very unique strategy. I probably could spend an hour talking about like all the nitty gritty of making sure of what other banks will do and how you would have to do it differently, but I'm at least just putting this out in the world of a common strategy. Essentially, I was doing a flip, borrowing the money 100%, and instead of selling it, I just refinanced. But this is also a way to do BRRRR much quicker because you don't have to wait 6 months or a year for the seasoning period. So I hope you enjoyed this video. I hope it was interesting. Feel free to reach out to me if you have any questions, pushback, and I will see you guys in the next one.